Just a little kick in the rump, the president told the head of the Federal Reserve. It was just before the meeting of the central bank's interest rate setting committee, and the American economy was failing. Federal government expenditure was an increasing issue, and a war was raging halfway across the world. President Richard Nixon was on the phone with Federal Reserve Chairman Arthur Burns in late 1971. Burns was informing the president that the Federal Open Market Committee was planning to lower a crucial interest rate in order to jumpstart an economy that had been battling to avoid a slight recession. Nixon put pressure on Burns to loosen monetary policy in preparation for the 1972 presidential election. It took demoralizing inflation, considerably increased unemployment, and a decade for the Federal Reserve to establish itself as a political independent institution. 50 years later, the Fed's reputation has been damaged not by a brutal and dishonest president's naked political ambition, but by its own monetary policy misjudgments, and correcting those errors comes at a clear political cost. Keep all of this in mind when the Fed meets again this week and Americans continue to vote in the midterm elections. Inflation is a defining concern for both. The financial markets believe the bank will maintain its rate hike pace by raising its key borrowing rate by 0.75 percentage point. Doing so a week before an election demonstrates the Fed's independence from politics today, as opposed to 50 years ago. The agency is likely to show patience by slowing down in the coming months. Stock prices have gained ground in the last 2 weeks as a result of this anticipation. Voters may be impatient to see the results of inflation-fighting efforts. Republicans are expected to retake control of the House, while the Senate majority may continue to rely on the vice president's tide-raking vote. Both parties are blaming one another for today's inflation, with no serious discussion about how to handle it effectively, because those decisions are considerably more difficult for politicians to make. For Congress, controlling inflation means limiting the increase of government spending. With a divided administration and a controversial presidential election looming in 2 years, deciding where to cut back will be challenging. Fighting inflation means raising interest rates and risking a recession for the central bank. Investors should keep an eye out for attempts to weaponize monetary policy for political benefit. It is a matter of economic credibility.